If I happen to start a trade as a bearish butterfly, I can go to an M3 if I roll back, because I can make the assumption if I'm in a bearish butterfly was overextended, but I have to roll back my bearish butterfly, then I'm probably near a bottom. So I just make that general assumption. I go into an M3 and then I go back to here, right, as normally started an M3, and I just redo the procedures. If I have an M3, it loses to the downside and the asset price is below my max loss point, right? In other words, I lose to the downside and I max loss to the downside. I can make an assumption that the market's down a lot and I can enter as a V32. Otherwise, I enter as an M3, right? If I have a bearish butterfly, it loses to the upside, I enter my next trade as a bearish butterfly because I have to make the assumption that the market's overextended at that point. So what I'm doing here is I'm taking my beliefs about how the market moves, and I'm just applying the trades, what I know about the strengths and weaknesses of the trades, to the marketplace.